Jobs are vanishing across the United Kingdom at a pace we haven't witnessed since the darkest days of COVID lockdowns. March saw 70,000 positions eliminated in just 30 days. That's not a typo. 70,000 people lost their livelihoods in a single month. And here's what makes this absolutely terrifying. This happened before April even arrived, before the massive tax increases came into effect, before businesses had to write their first checks under the new rules. What we're seeing right now is just the tremor before the earthquake, and almost nobody in the media or government seems willing to acknowledge what's really happening on the ground. The data tells a story that should alarm every single person in this country, whether you're employed, looking for work, or running a business. We're not just talking about a slight downturn or normal economic fluctuation. We're witnessing the fastest job destruction outside of a pandemic in over 15 years, and the sectors getting absolutely demolished are the ones that employ millions of ordinary working people. Restaurants, pubs, hotels, retail outlets. The backbone of everyday British life is cracking under pressure that's only just beginning to build. And if you care about staying informed on the UK economy and what's really happening beyond the government press releases, smash that like button and subscribe to Economy Reporter. We're committed to bringing you the unfiltered economic news that actually affects your life, your job, and your future. Let's dive into the numbers that paint a picture nobody in Westminster wants you to see. From the 6th of April, British businesses faced a double assault that's fundamentally changing the economics of hiring. First, employer national insurance contributions jumped from 13.8% to 15%. That might sound like a modest bump, barely over 1 percentage point, but the real devastation comes from the second change. The threshold at which employers start paying national insurance got slashed from £9,100 down to £5,000. This means businesses now pay that higher rate on far more of each employee's salary. It's not just a rate increase, it's a rate increase applied to a massively expanded base. Then came the minimum wage hikes, hitting simultaneously. The standard minimum wage climbed 7%. Young workers aged 18 to 20 saw their minimum wage rocket upward by 16% to £10 per hour. Those under 18 experienced an 18% jump to £7.55. Now, if you employ young people, those numbers should make your stomach drop. Let's do the mathematics that apparently nobody in government bothered with. Take an 18 to 20-year-old working a standard 35-hour week at the new minimum wage of £10 per hour. That's an annual salary of £18,200. Last year, the employer national insurance bill on that salary would have been £918 for the entire year. From April onward, that same employer now pays £1,980 in national insurance. The bill more than doubled. Not increased a bit, literally more than doubled. When you factor in the 16% wage increase plus the more than doubled national insurance burden, the total cost of employing that young worker just exploded by 22%, nearly a quarter more expensive overnight. And who employs masses of young workers? Pubs, restaurants, hotels, coffee shops, the entire hospitality and leisure sector. These businesses operate on razor-thin margins at the best of times, and they just watch their wage bills surge by over a fifth. The hospitality industry is getting absolutely battered, and the numbers are genuinely shocking. In March alone, before any of these increases actually took effect, the accommodation and food services sector shed 92,000 jobs. Read that again. 92,000 jobs vanished in 1 month from one sector. That's nearly 1% of the entire workforce in that industry gone in 30 days. Industry bodies estimate the sector faces £3.4 billion in additional costs. That's billion with a B. These aren't abstract figures on a spreadsheet. These are real pubs closing, restaurants cutting staff to the bone, hotels running skeleton crews. But the pain doesn't stop there. Business rates relief, which had protected hospitality venues since the pandemic, just got slashed. During lockdowns, pubs and restaurants paid zero business rates, while other businesses continued paying full freight. That relief gradually decreased to 75%, meaning hospitality paid just a quarter of normal rates. From April, that discount dropped to 40%. So business rates more than doubled at exactly the same moment that wage costs exploded by 22%. It's a perfect storm of cost increases hitting all at once. Vacancies in hospitality have already collapsed from 94,000 before the budget announcement down to 79,000 by May. That's a 19% drop year on year. Businesses aren't just laying people off, they're actively choosing not to fill positions when workers leave. The sector is contracting in real time, and we haven't even seen the full impact yet. The first payroll runs with the new higher wages happened in late April. The increased business rates started billing on April 1st, and the first PAYE receipts for the higher national insurance contributions came due in May. When those payments actually started flowing out of business bank accounts, that's when the real carnage began. Now, here's where the story gets even more disturbing. The mainstream media mostly parroted the Office for National Statistics headline, 70,000 jobs lost, a small decline of 0.2%. But if you actually read past the first paragraph, which most journalists apparently didn't bother doing, you discover something crucial. The health and social work sector added 70,000 jobs in March, the exact same number that disappeared overall. So what's really happening? The private sector is hemorrhaging positions, while the public sector remains stable or even expands. Look at the detailed breakdown by industry. Accommodation and food services, down 0.8% in a single month. Most private sector industries, down around 0.4%. Meanwhile, education, healthcare, public administration, all the government-controlled sectors, they're flat or positive. The real economy, the part where businesses have to actually make money and turn a profit, is firing people at an alarming rate. But government employers aren't cutting staff. They're insulated from the market realities that private businesses face. So the overall numbers look merely bad instead of catastrophic, because the government jobs dilute what's actually happening to regular businesses and workers. Job vacancies across the entire economy have now crashed to 717,000. That's the lowest level in 7 years if you exclude the obvious pandemic dip. We're now significantly below 2018 and 2019 levels, despite the UK population growing substantially during that time. Companies are simultaneously firing existing staff and choosing not to hire replacements. For 39 consecutive quarters, job vacancies have declined compared to the previous period. 39 quarters. That's nearly 10 years of continuous deterioration in job availability. The data on planned redundancies reveals the immediate impact. Companies planning major layoffs must submit an HR1 form to the government's redundancy payment service. These filings jumped from around 20,000 to 29,000 in March. That's a 50% increase in companies planning to eliminate positions. And remember, this data only captures large, planned redundancies. The vast majority of job losses, especially from small and medium businesses, don't even appear in these statistics. The real numbers are far worse. But the most alarming crisis is one that barely gets mentioned in political discourse. Young people are being shut out of the job market at a rate that should horrify anyone who cares about the country's future. Youth unemployment for those aged 18 to 24 has surged to 14.5%. Compare that to the unemployment rate for workers over 50, which sits at just 2.1%. Older workers have near full employment. Young people face rates 7 times higher. There are now 948,000 young people aged 16 to 24 who are not in education, employment or training. Nearly 1 million young Britons have nothing. No job, no skills training, no pathway forward. Here's the part that reveals the long-term damage being done. Of those unemployed young people, 22% have been out of work for over a year. They're not just temporarily between jobs. They're becoming long-term unemployed, watching months turn into years without meaningful work or the experience needed to build a career. And why would a business take a chance on a young person with no experience when the cost of hiring that young worker just doubled overnight? Why would you hire an 18-year-old and invest time in training them when you could hire someone with 10 years of experience for barely any additional cost? Which brings us to one of the most economically destructive policies that somehow gets celebrated as progressive: the aggressive compression of wages between the bottom and middle of the income distribution. The median wage in the UK, the point where half of workers earn more and half earn less, now sits at approximately £35,000 per year. The minimum wage for someone working full-time comes to about £25,400. Think about that gap. The difference between the absolute legal minimum and the median, the typical British worker, is only £9,600. That's just 40% more than the bare minimum. This is historically unprecedented. The wage spectrum has been squeezed so tightly that there's virtually no differentiation between entry-level positions and jobs requiring years of experience. 25 years ago, someone in a basic job could afford their bills, their food, maybe a budget holiday to Spain in the summer. They weren't wealthy, but they got by. Today, that same worker earns a much higher nominal salary but can't afford basic necessities. Their bills have exploded, food costs have skyrocketed. The purchasing power hasn't increased despite the higher numbers on the payslip. Meanwhile, someone who worked hard for 15 years, pulled extra hours, sacrificed family time, worked weekends and evenings, climbed the ladder to become a manager, they're earning barely more than someone who just started last month. What's the incentive to push yourself? Why forfeit your personal life and mental health to advance your career when the financial reward is negligible? The policy achieves the exact opposite of its stated intention. Instead of lifting low-wage workers into prosperity, it traps everyone in a compressed band where nobody can get ahead. It makes the majority of British workers poorer in real terms while simultaneously destroying the entry-level opportunities that young people desperately need. And here's where the situation becomes a self-reinforcing catastrophe. Companies are laying off workers faster than they're hiring. The unemployment-to-vacancy ratio, which measures how many jobless people are competing for each available position, has jumped from 1.7 to 2.4 in just 1 year. That means for every single job posting, there are now 2.4 unemployed people fighting for it, up from 1.7 a year ago. Competition for scarce positions has intensified dramatically. When someone loses their job now, they're staying unemployed for longer. There simply aren't enough openings to absorb the people being let go. This creates a vicious downward spiral. Workers lose their positions. They can't find new ones quickly. The total number of unemployed people rises. Consumer spending falls because unemployed people obviously spend less. That reduced spending means businesses sell less, so those businesses lay off more workers, and the cycle accelerates. We're watching it happen in real time, and the April tax increases have only just started filtering through the system. Now here's something that should make you question everything you're being told. According to the official GDP reports, the UK economy is absolutely booming right now. GDP supposedly increased 0.5% in February alone, bringing total growth to 1% since October. The official data claims that every single sector of the UK economy is growing rapidly at this very moment. Even accommodation and food services, the sector that just eliminated 92,000 jobs in a month, allegedly grew 0.04% in the latest data. Does any of that make sense to you? How can an industry growing its output simultaneously cut nearly 1% of its workforce? How can GDP surge while job vacancies hit 7-year lows? How can the economy be thriving when businesses are planning redundancies at rates 50% higher than just months ago? The numbers don't add up. Either the employment data is wrong, or the GDP figures are wrong, or the methodology for calculating these statistics has become so divorced from reality that they're measuring something completely different from what ordinary people experience. The contradictions are everywhere. Official statistics paint a picture of robust growth and economic health. Meanwhile, actual businesses are closing, actual workers are losing jobs, actual young people can't find opportunities, and actual wages are being compressed to the point where career progression becomes meaningless. Something is fundamentally broken in how we measure economic health, or perhaps in how that information is communicated to the public. So where does this leave us? We're brewing a crisis that almost nobody with power seems willing to acknowledge. Youth unemployment is creating a lost generation. Wage compression is destroying incentives for career development. The hospitality sector is being taxed into oblivion. Private businesses are cutting jobs while public sector employment remains protected. Job vacancies are at their lowest point in years while unemployment rises. And all of this is supposedly happening during an economic boom. The full force of April's changes hasn't even hit yet. Many businesses are still processing what these cost increases mean for their operations. The May PAYE deadline, when employers had to actually remit those higher national insurance payments to HMRC, that's when reality truly set in. The headlines in the coming months will likely be brutal as more businesses reach their breaking point. The policies implemented with the stated goal of helping workers are achieving the precise opposite. They're destroying jobs, eliminating opportunities for young people, and making it harder for anyone to improve their economic position through work and advancement. This is the employment catastrophe that nobody in power wants to discuss. The data is there for anyone willing to look past the headlines and examine what's really happening on the ground. 70,000 jobs gone in March was just the beginning. The real storm is still building, and when it fully arrives, millions of British workers and businesses are going to feel the impact. The question isn't whether this will get worse. The question is how much worse it will get before anyone with the power to change course actually does something about it. And right now, that question remains terrifyingly unanswered.